Good morning, ladies and gentlemen. Welcome to the 8th webinar in the partnership between HBS, Bird & Bird, AlixPartners and EP. We're always delighted to welcome you to these events. As a recovery begins, there are new questions arising all the time as we seek clarity on the road forward. Today, we welcome you to listen to our invited experts discuss the issue of hotel franchising, which has played such a major role in the industry over in recent years. During these challenging times, hotel owners have naturally relied more than ever on their brands and their management teams. It has been a traditionally strong partnership, now tested to the full as we've felt the real strain of the economics climate. The COVID-19 pandemic has challenged the landscape in every possible way. It's created a new rule book. So what does that rule book say, and what do we expect in the future? How have relationships between owners and their brands fared during this most difficult of times? How will franchising change as a result of the pandemic? What are the learnings which have come from this period of time, and how will deal structures potentially change? All to be discussed over the next 90 minutes. As we start to rebuild, there are many unknowns still to be faced. We're learning all the time about the challenges which we're going to be presented with over the next 12 months. After a revenue decline of more than 50% in 2020, the hotel and resort franchise industry is beginning to see the light at the end of the tunnel. When travel reopens, there are many predicting a hotel and resort franchise boom to follow. Is this correct? The economy is still so vulnerable, and there are so many still unknown factors that are beginning to come into play, and it is still so hard to read. So how will all this play out? For example, 1, it's expected that in the short term, city centres will continue to struggle for some time, whilst the regions and suburbs may well prosper. A number of employees are adopting hybrid return to work models, which means that the daily commute may well not return to what it once was. International tourism is likely to remain suppressed for some time. And this obviously has a knock-on effect on economic activity within city centres, which do require a certain level of density. Some forecast that it will take to the late part of this decade until we see full recovery. 2, it's been well documented that we are all the industry is facing real challenges, both financially, operationally, and culturally, to bring back a workforce that's been on furlough for now close to 18 months. How can that be achieved? 3, many businesses have been adapting their operational models during the last year. Many expect consumers not to revert back to old habits, but want to see genuine change in many areas. But what does this mean? 4, longer term, we can expect some regional high streets to prosper and thrive, and businesses that had previously focused on city centres adapt their models and move out to the regions. How will this create a change in the landscape? 5, city centres, we've talked about their challenges, but they could also emerge stronger. Although overall numbers of communities may well diminish, when they do come into work, they may well spend more, because actually the focus will be more on socialising and actually building relationships. Can that offset some of the fall in numbers? And finally, how will governments obviously help to support the economy as we go forward and help it recover as well as it possibly can? These are all questions that need to be answered, that we're all trying to find the answers to. But what does this mean for franchising? The next 90 minutes will give us many of the answers. Now, Lauren, can I bring you on to pose some polling questions, please?
Yeah, sure. Hi, good morning, everybody. Lovely to have you here. This is definitely a topic which has got a lot of interest, and always we like to get your view on things. So we start off with a few polling questions, which I hope you don't mind supporting us in answering. The first one is, what is your company's principal involvement in hotel franchising? Now, are you a franchisor, so a brand owning company, a franchisee possibly, a hotel displaying a brand including hotel ownership, an operator, an advisor, lawyer, consultant, accountant, etc., or are you in another category? It seems that we have got quite a few advisors with us, so thank you so much for joining. Second polling question quickly is, as a result of COVID-19, were there any concessions offered regarding the main terms of any hotel franchise that you are connected with? Yes, following intervention of the franchisee, or was it possibly yes, spontaneously by the franchisor, or unfortunately, no? Gosh, it does seem pretty varied. It seems that no seems to be the majority answer, which is a bit sad to see.
That's really interesting, isn't it?
Absolutely. Third question. As a result of COVID-19, have the main terms of any hotel management agreement that you're connected with been changed? Yes, for example, changes like concessions to fees, payments, etc. Or is it yes, that there's actually been a change to the franchise agreement? Or again, no, that there has been no amendment in terms? Okay, well, this one is a bit fairer. It seems yes and no have come out equally, also very interesting. And the final question is, which do you consider the biggest trend for the next 5 years within the UK and Europe? Do you think that there will be significantly more franchise agreements, possibly including the manchise option, which I know we'll be talking a bit about later? Do you think there'll be significantly more hotel management agreements, perhaps signed, than franchise agreements? Will there be significantly more owners opting for a third party, maybe a white label type management company with a franchise? Or do you think there won't be much change, or that possibly is a bit too hard to tell? Also very interesting. Most of you think that there'll be significantly more owners opting for a third party or a white label option. And I'm sure we'll be discussing that in the presentations a bit later. Thank you so much for sharing those thoughts. I really do appreciate it.
Thank you, Lauren. That's great. Thanks for your help. And now, before we introduce Graeme, a couple of quick points. Firstly, there will be slides presented during the presentations. We will share these with you after the event. So rest assured, you don't need to ask. We will send them on to you. There's also a chat button at the bottom, Q&A questions. So please ask any question you want. We will try to get back and answer all your questions as best we can during the session. So now we're going to pass on to Graeme, introduce Graeme Payne from Bird & Bird, which is a pleasure. Hello, Graeme. Graeme is a partner at Bird & Bird and heads up the retail and consumer sector. He's also co-head of Bird & Bird's franchise and distribution team. He's also, made me smile a bit, married to a franchise litigation partner at Bird & Bird as well, which must lead to a whole range of fascinating discussions at home, Graeme. So welcome and good luck. I hope you enjoy your presentation.
Thanks, Chris. Let me just get the presentation up. Can you see my screen yet, Chris?
No, not yet, Graeme.
No, okay. Let me bear with me 1 second.
There you go.
Great. Okay. Thanks very much, Chris. Yes. Oh,
that disappeared. I don't know.
That's bizarre. Okay.
Okay, there we go.
There we go. Thanks, Lauren. Yes, Chris, you're absolutely right. Victoria and I don't get invited to many dinner parties anymore when they know that we're both franchise lawyers. So in my session this morning, I'm going to give you a quick overview of to some of the points that Chris has raised, quite a high level of commercial growth and expansion activity over 2020 and the first part of 2021. I'm then just going to give you a flavour of some of the increased legal and legislative activity in the franchise space, and perhaps an indication of the trends not only in Europe but also outside of Europe. And then I'll touch briefly on some of those clauses that are still being heavily negotiated, almost regardless of the pandemic. And then, if I'm permitted, I might ask the question that we're posing, which is a hotel franchise worth having? So in terms of the commercial activity, sorry, my screen had temporarily frozen. I can go back a slide. Okay. Sorry. There we go. In terms of some of the commercial activity, as I mentioned, 2020 and the first part of 2021 has seen quite a significant level of growth and international franchise expansion. And it's still fair to say that the key growth markets have been the US, China, Japan, and despite the pandemic, Europe and India have still seen a high level of growth and growth via franchising. So you'll see on the slide a number of the usual suspects on there. For the US, the top 3 hotel brands, Marriott, Hilton, and IHG, these accounted for 69% of projects and 65% of rooms for the US in the construction pipeline for the first quarter of 2021. So a significant level of activity. Hilton, for example, with 2 of its lifestyle brands, Tempo and Motto, has announced plans to grow in US, South America, and Europe. And Hilton at the moment is also planning on adding a significant number of hotels in India. It's backing India as a market for medium and long-term growth. Marriott has continued to grow, debuting a number of brands, a number of hotels in Japan. IHG, for example, with its premium hotel brand Voco, which started in Australia, has announced that it signed 50 hotels across 20 countries, which for that group is its fastest ever global expansion. Other brands, Hyatt, for example, have been executing franchise agreements in Asia, South America, and they've been announcing further growth in Canada and Sweden. And then finally, Wyndham, it's converted over 50 hotels into its own brand hotels, and it's signed over 112 new franchise agreements. And this is across US, China, Middle East, and parts of Europe. So, quite a lot of growth. So whilst hotel brands and franchising has been busy despite the challenging times, the legislators and the lawyers have been busy too. I've extracted onto the screen the franchise legislation tracker that we built over the course of 2020, just to give hotels and other businesses using franchising a bit of an overview as to those markets that are either very heavily regulated, as indicated by the red colour, versus those that aren't regulated at all or are very light touch, indicated by the green colour. You'll also see large swathes of amber, and that's particularly true for Europe, which is sort of medium weight in terms of the amount of regulation and legislation. But I also think, and we'll come on in a second to look at the Netherlands, which is probably got the newest piece of legislation, certainly in Europe. There's beginning to be a trend, both in Europe and in other markets, for example, Saudi Arabia, Australia, Thailand, where the legislation is increasingly burdensome for the hotel franchisor, and increasingly pro-franchisee. And I think whilst that perhaps isn't the full answer to is a hotel worth having, I think the implication of regulation is certainly a factor. The good news, and this isn't an advertisement, but the UK is still a very, very light touch market from a franchise regulation perspective. And in the tracker that I showed, the global overview on the previous slide, we have a summary for each country, so you can very quickly see what the extent of pre-contractual disclosure, registration, and any other key issues that you as a franchise brand might need to consider. So UK, still, a relatively easy market from a regulation perspective, and the key issue is, what do people say before the contract is concluded, and then what does the contract, that hotel franchise agreement, say? Contrast that with the position in the Netherlands. The Dutch Franchise Act came into force at the beginning of this year, and interestingly, the aim is to be pro-franchisee. So that's certainly something that franchisors need to be aware of if they're looking at the Dutch market, and indeed other markets, as I mentioned earlier. And broadly, franchise legislation impacts on the pre-contractual phase. When the deal is being done, what is it that the brand is saying to the potential franchisee about the franchise opportunity? And how is that phase regulated and documented? And in those heavy regulated markets, for example, like the US, that I assume a number of you are familiar with, a lot of pre-contractual information needs to be provided. Also, and I think it can often be forgotten, that the regulations, and in particular Dutch regulations, do apply to the relationship of the parties in the term of the franchise agreement, which I'll come on to on the next slide. And regulation can also impact on what happens at the end of the relationship. Can that building be flipped into another competing brand straight away? What happens to the goodwill on sale, for example, which is a key provision in the contractual arrangement. So whilst the new Dutch Franchise Act does have similarities with some of the other European jurisdictions which are regulated, there's also a couple of points that are worth bearing in mind, and perhaps a part of a global trend, a global shift in legislation. Just a quick point I wanted to make out, even if you are a UK brand, a German brand, an Italian brand, or a US hotel brand, and you've got your national governing law governing the franchise agreement for the Netherlands, nonetheless, mandatory provisions of the Dutch Act will apply regardless of that choice of law. Interestingly, if you've concluded a hotel franchise arrangement prior to January 2021, then the Act and that pre-contractual phase requirements will not be applicable for the first couple of years. But, and I think this is a point that will often be forgotten, in a couple of years' time, the provisions of the Dutch Franchise Act, so in 2023, will apply to regulate the parties' in-term relationship. So there's almost a 2-year grace period, but then you've got to remember, actually, we've got another set of laws governing the franchisor-franchisee relationship. I'm not going to take you through chapter and verse the entire Dutch Franchise Act, but a couple of points I just wanted to highlight. There are provisions in the Dutch Franchise Act that impact, for example, on the goodwill attribution, which will go to the sale valuation. So franchisees will be very keen to take advantage of that. 2 other very quick points. A franchisee can sign a deal in the Netherlands, but then can walk away up to 4 weeks later without liability. So that's going to potentially frustrate commercial and operational teams thinking that they've got a hotel arrangement over the line. And then I think the third bullet point on the slide is that the Dutch Franchise Act sets conditions for the franchisor or the brand making amendments to the franchise formula. So provisions, for example, which are often contested in any event around, say, upgrades or any other provisions which require significant capex by a franchisee, are now potentially open to challenge by franchisees as a result of the conditions that the Dutch Franchise Act sets to a franchise arrangement. So you can see that the legislation is shifting some of the balance in the franchise agreement in the franchisee's favour. And that's the downside of legislation in this area, which is attempting to balance sometimes very large and very small relationships, rather than perhaps in the hotels where the parties are maybe not equal, but more sophisticated and slightly deeper pockets. Just wanted to give people a quick overview, and we're going to share these slides of the European landscape, which, as I said earlier, is more in the amber category, sort of medium weight, typically in terms of where and how the legislation bites and what the franchisors, the hotel brands' obligations are. I think I would say that with the increasing amount of regulation, if you can, as part of your planning, take counsel earlier around what are the steps we have to do, when can I conclude a deal legally into your planning, the better. Perhaps less so for a number of European markets, but certainly for a market like France or Italy or Spain or the Netherlands, I think you need to bring in counsel slightly earlier. And that's certainly true outside of Europe in markets, for example, in the Middle East and Asia Pacific. So just in the brief couple of minutes we've got left, these provisions on screen are and have been the clauses that are often negotiated and debated. And I think the reason why some of these clauses are now perhaps even more pertinent and need thinking through is because of legislation in market that may well impact from a franchisee's benefit. As I mentioned earlier, say, what are the franchisee's obligations in regard to upgrades, and is that fair and balanced, and how does that fit in with a regulatory framework like the new Dutch Franchise Act? We've mentioned issues like choice of governing law, and you may well have a US, a UK, an Italian, German governing law, but again, mandatory local law provisions. I think just briefly, 2 points that I didn't include on the slides. There is still increasing more legislation around data protection. There's been very recently, last couple of weeks, new standard contractual clauses coming out that regulate the flow of data, and obviously with the hotel franchise relationship and maybe the two or more parties involved in the hotel operation, that sharing of data, how that's regulated, obviously how that data can be exploited, increasingly more regulation and standard clauses in that area. And then sort of slightly changing tack, but still very relevant to hotel franchising and the contractual arrangements, whether it's via the manual or via the agreement, or it should be via both. Franchisors looking to include certain sustainability related contractual obligations, and having just concluded a survey of over 110 retail and consumer businesses, you've got some very interesting insights there on the sustainability requirements that brands, hotels and other businesses are looking to impose. So just very quickly, and I know that the panel later this morning are going to look at this question in much more depth. Is a hotel franchise worth having? Well, of course, a lawyer can't give and would never give a definitive answer, and that obviously goes against our professional code, doesn't it? But I've attempted to capture on screen just some thoughts from a dyed-in-the-wool franchise lawyer of, believe it or not, 21 years. Certainly benefits and risks for both sides, which I know the panel are going to go into depth later. But interestingly, I think from the polling question, you can see that franchising is on the rise. The commercial stats that I gave at the beginning of this presentation, okay, not all of those arrangements are franchised, but a significant number are. It is a tried and tested model, and I think the ability for brands to use a local partner's expertise and market know-how is a key benefit. But having seen some of these relationships sour or not realize their potential, I still think it's incumbent on the brand to invest time with really making sure that the franchisee is culturally as well as commercially fit for their business and brand. These are long-term relationships. These aren't simple shareholder agreements. Quite the opposite. These are long-term commercial relationships. So my advice is it is worth having, but invest the time in making sure you've got the right partner to your arrangement. That's it for now from me. So thank you very much indeed.
Thank you, Graeme. That was great. You were going to try and answer a question at the end, I think. You said that you hinted at the beginning, or are you happy with that?
I think I've answered the question saying, is a franchise worth having? Yes, it is, but get the right partner.
All right, that's a nice way of putting it. Now we have a question on the chat from Pierre below, which I think you've also partly answered. What is the difference between franchise legislation and other management contract legislation?
Sure. I mean, I think the quick answer is that for those markets that have franchise regulation, that will either be captured in a specific act, be it a franchise act, or in a number of markets they have it in their competition or antitrust acts. Typically a management contract which isn't a franchise will be governed by non-specific franchise legislation. So there might be a patchwork of legislation that impacts on that, on a management arrangement. So something that governs commercial contracts in that market.
Thanks, Graeme. Now we have another one here. Please, can you give some commentary on the term of the franchise given by the different franchisors and how you negotiate it?
Can you repeat the question? Sorry, Chris.
That question. Please, can you give some commentary on the term of the franchise given by the different franchisors and how negotiable it is, I guess, is what the question is.
If the question is around duration, as in the length, I think these are relatively fixed in that a franchise brand will want to operate in defined blocks, typically of 5 or 10 years, with renewal opportunities. So I think there's little by way of negotiation around the actual duration. Where I see negotiation is around the conditions to renewal, which can be, because these are long-term relationships, it might require a significant capex as a condition to renewal, which will depend on a refurbishment upgrade cycle that franchisor and franchisee can agree. So I would say that conditions around renewal are open to an element of negotiation, but the sort of blocks of development, term and growth are usually non-negotiable and usually accepted unless they're left field periods.
Thanks, Graeme. Now, there's another question as well. If you have a look at the chat after as we leave, if that's okay, if you just answer those personally, that'd be very kind indeed.
Pleasure.
But thank you very much, Graeme. That was excellent. Can I now welcome Simon Allison, please? Simon runs a unique global network of hotel owners called Hoftel. Is independent of any brands and involves over 70 corporate members, which between them control over $100 billion worth of hotel revenues. So a very inclusive alliance. So welcome, Simon, and I look forward to your presentation.
Thank you, Chris.
Good luck. Good luck.
Okay, I'll share the screen, so that may take a second. Here we are. Can you all see that?
That's great.
Yes, we can. So, okay, I mean, building on what we've had before, this is really an owner's overview, which asks, does a franchise give you greater freedom, or are you just swapping one set of rules for another? And is franchising the way forward for owners? As Chris alluded to, now I'm trying to work out how I go forward. Yes, there we are. The reason I think I've been asked to talk on this is I do run this rather unique network of hotel owners, as some of you will know. We have more than 70 companies in the Alliance, and quite a few of them have been franchisors for a long time, people like Amaris or 4C or HR Group in Germany. Others have moved into franchising, and it's a trend we're seeing a lot, for example, in the Middle East, where we've had Al Dar becoming a franchisee, Abu Dhabi National Hotels, which also interestingly now has its own white label operation. And the First Group has also gone to franchising. And in Asia, we have members like SC Capital that also have set up their own white label operator. So it's definitely a trend that's coming, and we're seeing that throughout our world of members. I think the crisis has accelerated changes that were already underway in terms of where this is going. Most owners today, I think, recognize the clear advantages in working with the big brands, which are definitely there. But I think it's fair to say that not many of them like the standard hotel management agreement structure. And adding to that over the last 12 months has been that management companies have been quite varied in how they've approached the pandemic. We'll look at the contractual side, which I thought your quick poll, Lauren, was very interesting and very similar results to what we've found. But also just operationally, quite a few of our owners were complaining that some of the brands have really been a bit slow in their reaction times when they've had to push things up the chain to their head office. And there has been a desire for a slightly nimbler approach where things are in their own hands. So obviously that plays to the strengths of franchising, which is emerging as a strong alternative, I think, both for self-managed and white label operations. But owners do need to be aware that there are still some issues to overcome, and we'll tackle those a bit later. In terms of management agreements, I mean, I think most people on the call will know all this already, so I'll skim through it. But it is probably the most one-sided agreement you'll ever find anywhere in the business world. Certainly after 10 years in investment banking, I never saw anything like it in any other sector. You have a long-term agreement where the owner basically gives full control over virtually everything to the operator, but then remains liable for almost anything the operator does, short of gross negligence and willful misconduct. Gradually over the years, more and more decisions have gone outside the hotel to a cluster or a region or a global program, which will often involve recharges. If at some point in your 10, 20, 30-year contract you decide you don't like it, although there may be a termination clause in the contract, it's almost impossible to fail, as I think we all know. So you can't get rid of that contract. And I think this has been very much on owners' minds this year, not last year when everyone was in trouble, but this year, the operator can make money and will be taking fees even if the owner is potentially going bust. And certainly in the US, that's been true for many, many hotels in special servicing where they've got negative cash flow. And one of the reasons for that is they're paying fees and recharges to the brand. What we've also seen is that the standard agreements that you're told you have to sign are to some extent a myth, both on signing and on treatment afterwards. For new owners, contract terms are getting worse, if anything. I've seen some really quite, I think, ridiculously rigid terms or one-sided terms for new owners. Whereas if you're an established owner with experience or power, because you've got a lot of scale with that operator, or a location the operator really wants, you can end up with an entirely different set of terms. And I think the idea that people will sign into something that's standard when they realize it's not is eroding some of the power of the negotiations around the management agreement for the brands. We also did a survey last year with HVS, in fact, jointly, of our members and some of their clients, looking at how the brands had reacted contractually to COVID. And as I say, very, very similar reactions to what the quick straw poll at the beginning showed. On management fees, roughly half of brands were making a concession, a waiver, a deferral, or a reduction. Slightly under half weren't. On FF&E reserve payments, around 40% could waive their contributions, 30% could defer them, and 30% got no concessions at all. And this was one we threw in to be a little bit, not cheeky, but I thought it was quite relevant. Is the brand charging you sales and marketing fees on pure COVID-related business that has absolutely nothing to do with the brand's marketing activities, quarantine, key workers, housing asylum seekers, and so on? And the encouraging thing there was 60% of brands actually didn't charge fees on that, but still 40% did. I think the key thing in our finding, and I can't go into this brand by brand because we anonymize these results like STR would to maintain confidentiality, but I think I can reveal that in every single major brand family, there were differences in how owners were treated within that brand family. And I think, again, that sharpens an owner's desire to take back control of what's going on. So look, franchising, as we all know, has significant benefits. If you want more control, you look after hiring, sales, revenue management, cost control, procurement, etc. Your recharges are greatly reduced, and that annual budget round, which in a managed hotel can last months, as we all know, is greatly reduced. And of course, you keep some of the key benefits of the brand itself, lower OTA commissions, global distribution, and so on. It's not easy to set up your own operation. Some people say, oh, you just have a good GM and that's it, but it's usually a little more complicated. And that, of course, has stimulated the rise of white label operators, which we're seeing, as I say, now in the Middle East and Asia, as well as Europe. And that's obviously helpful to smaller owners who want some expertise that they couldn't hire internally. And you can see here, I mean, this is now slightly old data, but even 3 years ago, IHG franchised more than half of its hotels, Accor almost half, probably more now, and Marriott and Radisson also substantial proportions in Europe. And if you wonder how far that trend can go, in the US, 80% of branded hotels are under franchises by 2019. So clearly that's quite significant. So is this a panacea? Does it solve all your problems? Not entirely. There are actually some disadvantages to franchise contracts over HMAs. I'm sure other experts can talk about this far better than I can. But there are generally no performance clauses. That's interesting, I think, because you could potentially have performance clauses based around whether the brand is achieving the distribution it claims. It's more complicated, of course, because they're not in charge of sales. But it's very, very rare. I've only ever heard about it if an owner is experimenting by bringing in a newly created brand. In which case you might get some concession there, but generally you don't. Obviously, the brand ceases to control the day-to-day maintenance, so there may be stricter rules on PIPs and on brand standards. And quite a few, I think, management companies or franchise companies actually charge you a fee up front just for signing on, which I've seen in management agreements, but again, is very rare. If you already have a management agreement and you want to convert it to a franchise, that can be difficult. You will often have to pay some compensation to the brand for loss of fees. That may be, for example, by lengthening the contract, or there may be other ways of doing that. Again, you may have to suddenly undergo a CapEx program to maintain standards that you didn't expect on conversion. You may need lender approval for a change of operator. And of course, even if the staff are in theory yours, in practice, we know that the ex-com really work for the brand. So you may have issues in keeping them and redeploying them. And the final question, which I actually heard asked 5 or 6 years ago by Al-Karim Natu at 4C, who I think was ahead of his time on that, was the question as to whether the white label operators are still really on the side of the owner. Obviously, their contracts are more aligned, which people appreciate, but their pipeline does increasingly depend on being an approved brand partner for whichever brands they work with. And in the end, that relationship may be coming to matter more than with any individual owner. I've also recently, just in the last week, actually heard stories that some white label operators are not sharing benchmarking information they get with their owners, which suggests that maybe they're pulling back a little bit from really being in the owner's pocket and becoming more institutionalized as independent entities. And really just a question for the other panelists, because I don't know, where are white label contract terms going in terms of length and alignment? Well, that was a very quick overview. I will hand back to Chris and to others, and unless there are questions, Chris, that you want me specifically to answer.
Simon, that was excellent. Thank you very much indeed. I think there is a question on the thing. If I could just ask you to answer as we move forward, but I know we're quite tight on time. So, can I introduce Russell, from Chairman of HVS, into the equation, please? Russell.
Hello. It's a long time since I've been introduced into an equation, but nice to.
Good luck with your panel.
I thought you were going to ask Simon a question at that juncture, but maybe we'll keep him in the background and bring him in a moment and join the panel for a little bit of time. But the overarching topic today is why a hotel franchise is worth having. And following these two great presentations, we're going to focus on the pros and cons of hotel franchises. With me are 4 distinguished experts, each one with a different focus on the subject and each with different opinions to share with us. So please welcome, as they switch on their cameras and their microphones, Karen Freeb of Bird & Bird, Carmen Hui of Booking.com, Frank Croston of Hamilton Partners, and Jerome Breet of Marriott. So in addition, Graeme and Simon, our 2 guest speakers, they're not too far away in case either of them would be useful to help us at some point in dealing with the specific questions. But I've prepared a number of questions, and we're obviously going to work our way through them. And some of you have already very kindly started putting questions into the Q&A box, and I will keep my eye on what's in there from time to time. But it's very important that we deal with the questions that are uppermost in your mind. So don't hesitate to ask a question. Can I make a plea against anonymity? There are some questions that are already there that have got anonymous attendee, and we'd really like to know who it is. So if for whatever reason you want to be anonymous, please don't be, and please share with us who you are so that we know the angle that you're coming at. Ladies and gentlemen, it's great to have these 4 people. You don't want to listen to me. I also want to listen to them. So I'd like each of them to start with by spending up to 1 minute summarizing your own personal experience within the hotel franchising arena, and why your opinions today matter so much from our webinar's perspective. So I'm going to start in company alphabetical order with Karen. Why are you such an expert? Why should we be listening to you? You have 1 minute, and I won't add without hesitation, repetition, and so forth, but go for it, Karen.
Thanks, Russell. I don't think you'll need to cut me off. I'll probably take about 30 seconds. I'm a lawyer. The hotel sector is very much my meat and drink. It's pretty much the only sector that I have regular dealings in. I deal with hotel management contracts and with franchise agreements. I act probably more for owners than for operators, but I do act for both. And therefore, I think I have a good perspective on what people are looking at the moment.
Thank you. Carmen?
Hello, everyone. Thanks, Russell. Carmen Hoy, Commercial Director for Owner Partnerships at Booking.com. So during my last 4 years at Booking, I have built up a team in key markets around the world that support ownership groups and independent hotel management companies. And in this context, because many of our partners own and or operate across both branded and independent properties, the team spends a good chunk of time helping partners understand how to optimize a relationship with Booking.com under the various models that we'll be talking about today. Prior to Booking, I spent over a decade leading the European business of host hotels and resorts. And there I spent a good chunk of time negotiating hotel management contracts, as well as franchise agreements. So I think in terms of what my contribution is to this webinar is bring a bit of a bookend perspective, stretching across from owner to online partner.
Wonderful. Frank?
Yeah, morning everyone. Good to be with you. Hamilton Hotel Partners merged with Pyramid Hotel Group out of the US February 2020. So the group has significant franchise relationships with all of the major brand families, and we're very actively pursuing growth in the post-COVID environment, and we've probably got upwards of 10 live ongoing franchise discussions. We always tend to run a competitive process during the selection process, and we basically have within our portfolio a variety of franchise partners and the ability to operate hotels on a franchise or on independent platforms, and we do both. So hopefully I bring to the table some sort of current relevant experience of the franchise environment and how to navigate your way through it as an owner.
Thank you so much. Last but not least, and a huge welcome to Jerome, who's joining us for the first time since his recent move internally within Marriott. It's very nice to see you on this occasion, Jerome. Really appreciate you joining us, and to many of our audience, I'm sure this is the first time they've come across you. So instead of having a minute, you can have 1 minute and 10 seconds.
Thanks, Russell. I was actually planning to do it in 30 seconds, but I'll expand a little bit more. So I spent the last 15 years or so working in the managed and franchise business, first with JLL, both in Europe and in the Middle East, prior to joining Marriott almost 10 years ago. So it was very interesting because I've seen the birth of franchise in Middle East and Africa. This was really not a common model then. And we've experienced firsthand a lot of the requests for newborn franchisees or owners of managed hotels wanting to become franchisees. So I relate a lot to the points that were raised earlier during the presentations and the challenges that come with those conversions. So Great. It's a pleasure to be here.
It's a pleasure to have you. So panel, we're here to discuss the pros and the cons, the advantages and the limitations. Let's split this into the hotel owner investor at one end and the hotel company at the other end. So let's take the hotel owner investor. Let's focus on the advantages for the moment. We'll come on to the disadvantages, but what do you see as the main pros? Choose one, and of course, if you choose one, it means that the others can't choose the same one. So let's start with Carmen. What is your one major advantage from a hotel owner or investor's perspective of going down the franchise route?
Okay, so I'm guessing that because we have 4 people, we're all going to be able to choose whether we're talking about the pros for hotel owners or pros for the hotel company. But
no, we'll come on to the hotel. We'll come on to the hotel company first. Let's just focus on the hotel owner or the investor for now.
All right. Thank you for letting me go first. So I have the easy job. Everyone else is gonna have to choose something else. So I would say it really is based on experience. So the main advantage that the global brands can bring when it comes to franchising is that they've been around for decades. And with that comes a wealth of experience, right? From design and construction to operating service standards, and not to mention a network of highly trained and experienced general managers, which was something that Simon alluded to. When I was with Host, for instance, I worked with a number of superstar general managers in our Marriott properties. And that experience comes with a certain set of expectations, either explicit or implicit, physical and virtual. And that's been not just between the franchisor and a franchisee, but also other stakeholders in the ecosystem, like lenders, like equity capital partners, and also third-party relationships between, let's say, a global chain franchisor and an OTA. And certainly, last but not least, as well, consumers. So I think that with this experience comes a lot of advantages.
Okay, that was your one. Frank, from your perspective, what is the one key advantage?
Well, I'm completely the other end of the spectrum to Carmen, because I've never been offered a general manager by a franchisor. But
I wondered who was going to pick her up on that. Thank you.
There is basically, it boils down to customer ownership, and that customer ownership is what's appealing to the franchisee. If the brand has demonstrable customer ownership, which converts into a strong pipeline into the city in question, with a high rate of demonstrated demand delivered through the system, that's the starting point for selecting them potentially as a franchisee. So there are huge advantages that come with that in terms of the ramp up time, the quality of the customers that you're able to attract, their loyalty to the brand and eventually to your property. But you really have to be cautious that, you know, I have a little test, and we could maybe give it to Jerome in a minute. It's like, can the head of development for a region name all of the brands in their system? The brand families have so many brands now that the consumer ownership, customer ownership that I'm talking about can't exist if the customers don't know the brand. So be careful which brands you pick and how well distributed that brand is within the family. So we all know that Marriott can deliver great volumes of business, but you have to select which brand, and if that brand is well distributed in your territory, then fine, and look at the statistics. But to me, it all boils down to customer ownership.
Okay, thank you. And speaking of Jerome, take up the challenge, Jerome, and pick up where Frank left off, please.
We've got 30 of them, so if you give me an extra 15 minutes, I'll go through all of them. But I do know them, yes. Interestingly, a lot of them are actually not in this region because they are really US focused or Africa focused, for example, such as Gator or Protea. Yeah, I'd probably expand on what Frank just picked up. I'd say for me, it's loyalty, right? If I look at what we've been able to do with Marriott Bonvoy, it's about capturing those guests, making them loyal, being part of their travel wallet. And I think the bigger operators, or certainly the more focused ones, are increasingly focusing on this aspect. Not just being a loyalty program to stay in hotels, but being there in the day-to-day activities, be it through co-branded credit cards, experiences, various types of rewards across a partnership with ride-hailing companies. This really pushes the customer to stay in the network and to continue using the operators' hotels. And and that's probably not going to be too pleasing to Carmen, but obviously booking direct with the operator, which reduces the commission structure, albeit obviously booking.com being a great partner of ours. That's really the focus.
Okay. All right, thank you. And last but not least, from your perspective, Karen, the advantages, the main advantage that hasn't already been covered by the others to the hotel or to the hotel investor of going down the franchise route.
I don't think this has been covered, and probably it's the simplest way to put it, but we have a lot of investor owner clients who actually feel that a franchise, obviously subject to the controls that the the franchisor builds in, but it gives the owner and the investor greater control for the most part over their own destiny. So if you're the kind of owner that likes to select your own staff and have control over the day-to-day operations, then it's a good model for you on the whole. Having said that, obviously most of the big companies will want to see significant brand protection in there, but that can also be an advantage to the owner to have that support of the big brand.
Okay, well, we've talked about the pros. What are the cons? What are the disadvantages? And again, please just select one of what you feel is the most important to provide a reason for a hotel owner or investment not taking on a franchise. So balance what you've just said and say, well, okay, on the other side of the coin, here's a good reason why a hotel investor or owner shouldn't go down that route. Frank, do you want to kick us off?
Yeah, I often don't find that a difficulty as we're approaching an acquisition by one of our partner investors, because we generally co-invest alongside our capital partners. It normally drops into a bucket of this needs a franchise, or no, this will be fine positioned on a platform. So then when you get into this should be a franchise, the disadvantages which may come with some potential franchises that you could select are the PIP costs. The property improvement plan, so-called, may be prohibitive. And really what you're talking about is how well does the asset fit with the brand? And you should never be a franchisee if you don't believe intensely in the brand's values and what it has to offer to consumers. That's a bad starting point. You've got to love the brand, engage fully with it. It's a set of tools, and it's like giving tools to different individuals. The product that you get depends on how well you use the tools or how well you're able to use the tools. So I think you have this kind of, yes, it's franchisable, no, it would be better independent. And then if it's franchisable, go through an economic analysis, and the PIP costs and the general costs of the franchise, to me, are the key drivers, as well as this pre-qualifier of, is it a good fit with the brand? So don't try and make a silk purse out of a sow's ear.
Wonderful. Now, Jerome, I promise you there is nobody from Marriott listening. And as a result of answering this question, you're not going to get your P45. I can't guarantee that, but I'm sort of hopeful. So at the risk of you invoking the fifth, why would you say someone shouldn't go down the franchise route? And the answer isn't because a management route would be better, okay? You're not permitted that answer.
Yeah, I'd actually split that answer in two. I'd say if you're a currently managed hotel and you're thinking of going into a franchise, very often those discussions, especially driven by COVID, come from a cost perspective, all the fees the managers charge. The reality is once you load in the franchise fees and the various other charges, because loyalty is still there and there's a bunch of other charges, you don't end up with a significantly lower fee. And then you rely on your ability to actually manage the hotel and whether you can actually do it. On the other side, if you're an independent hotel and you're considering branding, well, then I'd actually refer you to the McDonald's model, right? If I have a cheeseburger in New York, I want the same one in Beijing and the same one in Cape Town. The truth is brands are fairly similar in their approach to a courtyard hotel, as far as we're concerned, for instance. And so, yeah, it does leave a little bit of entrepreneurship, but not all that much. You still need to abide by the operating standards. You still need to keep your hotel on standard, and brands are significantly more aggressive towards maintaining standards when they're franchising.
I'm not quite sure you answered the question, but I'll give you another opportunity to come back in a while. Karen, from your perspective.
Yeah, I was thinking of one client of mine in particular there who'd say, this wouldn't suit me at all, because I'd much rather have a management contract, and I pay a fee and I can put that on one side and those experts run that business on my behalf. That's what he says allegedly, although I have to say that, you know, he's very, very keen on the other hand on also getting involved where it would suit him. I just wanted to come back and, so if you're a more passive type of owner, in other words, a management contract suits you better than a franchise agreement. Just touching on Frank's point there, coming back to the PIP point, it reminds me of a situation I had a few years back. You remember when the market was very, very hot and buyers were snapping up big portfolios, private equity houses in particular, I think, without looking into too much detail about what they were taking on. And I remember being presented with a prospectus for the sale of some of these hotels a few years later that were subject to management contracts. And I said to this particular owner, have you consulted X, i.e. big brand? What's it got to do with them? I said, well, they have a franchise agreement and you have to get their permission to do what you're proposing to do. And you know that they might ask you to dust off the PIP or put a new one in place. What are you talking about? And I said, well, we'll give you some advice on that. And this generated a whole program. The sale process had to be put on hold and a PIP program brought into place instead. So I think that there can be a lack of understanding with some owners as to this issue with the PIP at various levels of the deal that you know Frank first mentioned a minute ago.
So thank you, Carmen. You're obviously not at all concerned with PIPs, and everybody says that the idea of the OTAs not needing to have brands in place and for the hotel operator brands just to sort of disappear, because you don't need a brand when it's booking.com that's helping to drive the business. Is that your argument for not going down the franchise route?
Quick answer is not quite, but maybe before I give you the real answer, I want to just clarify for the audience, because amongst our panel, we are answering these questions from a perspective of interchanging both a franchise, meaning brand plus management, i.e. brand managed franchise, as well as a franchise brand without management. And I just want to clarify that we're going to be talking about this topic from both perspectives so that people don't get confused, because I'm going to use the answer that Karen used for her first question, and it's allowed, I guess, Russell, because this
Absolutely.
is and flip it, because I actually believe that the main reason to not go down the franchise route is the lack of control by doing so. If you become affiliated with a brand franchise, you just lose a lot of freedom, and this goes to the relationships with third parties like OTAs, like ourselves. It goes to even controlling your own prices and what to do with your room. So I think that's where, when it comes to a brand franchise, those are the reasons not to join.
Okay, I'm going to switch the focus from looking at this from a hotel owner or a hotel investor's perspective to looking at it from the hotel company's perspective, the brand provider's perspective. And you know, who best to kick us off on the pros, why you should go down that route than Jerome. Give us one and only one, and let's try and keep these answers a little more brief. We've got a lot of material to cover, and I want to get on to our audience's questions as soon as I can.
Yeah, well, I mean, it's hard because I see only good reasons to do it. And beyond the loyalty program that I've mentioned earlier, which is possibly the best reasons to go for it, I'd say it's a simpler relationship, right? You get to run your own business. The brand does take care of delivering the standards to you. They take care of delivering everything you need to do that business, and then you're on your own with supervision. But that really is the main interest.
Okay, boils down to that. Karen, from a franchisor's perspective, what are the main advantages for them?
And looking at it through my lens also, I find that it, in theory at least, is a much more systemized procedure. So a brand like Marriott, for example, will have its own very carefully thought through set of standard documents. And I think not just the idea, but certainly the experience is that those are not negotiated. They don't need to be negotiated to the same degree that, say, a hotel management agreement would be. So the legal process is shorter. A lot of franchisors say this is our agreement and we don't tolerate any amendments. Now that is very unusual for that to happen, but the degree of toing and froing, I would say, on a management agreement is significantly less than you would have with a management contract. I don't know if Frank would agree, for example.
Would you, Frank?
Yes, generally. I mean, but I think, to the question of the benefits for the brand, to me, it's system growth, and it's system growth which is largely equity free and gives a tremendous financial benefit to the brand over time. And, let's bear in mind that, 20 years ago, the city kind of forced all of the public companies to dispose of assets in order to pursue the asset light model, which basically means management contracts and franchises. And toggling between the two, the return on equity for a franchise is far higher than it is for a management contract, which is why you've seen an increasing willingness for brands to franchise, particularly in territories where there is an established array of qualified third-party operators. So I think the reason for this rapid growth from the brand's perspective is largely economic.
And what a wonderful introduction to Carmen, because 20 years ago, as Frank was saying, a company called Host was born out of the ashes of shareholders' desires to see the separation of the bricks and the brains. From your perspective, can you add anything to what's already been said? And from the hotel franchisor's perspective, the key advantage?
Yeah, it's tough to follow Frank because he essentially took all my great arguments. But let me try to evolve my answer a little bit, which would be, not only is it a very smart growth model to growing the brand awareness in an asset light and with the franchise independent managed model in a human life fashion as well. I think here is where there's a longevity. You do hard work upfront negotiating the contracts. And by the way, there isn't a ton of difference between a franchise agreement and management contract in terms of duration. You do that negotiation up front and you're locking yourself in for a fee stream, as we heard from some of our colleagues, Graeme and Simon earlier, in a very, very long-term relationship. So that's a very smart growth model.
Okay, guys, I'm very concerned that we need to move on, but I'm conscious that we've dealt with the pros, but not the cons. Very quickly, has any one of you got a short answer to say, well, what are the key risks to the franchisor of going down the franchise route? I see Frank has his hand held up.
Yeah, I think it's poor brand representation, because the reality is that a poor operation of a brand can really have a negative effect. The reviews on social media spread like wildfire, and you really don't want a brand damaging representation of the brand to drag the rest of the fleet down with it. So that's the risk, and it's up to the brands to police standards and service delivery and product quality really closely for the benefit of all franchisees.
Wonderful. Jerome, you want?
Yeah, it was the same point really.
Okay, in that case, I'll move on if I may, in the interest of time. Carmen, you wanted to add something?
Yeah, I think this is a bit of a point that in the presentation that we touched upon. It's the risk is brand value dilution, and it is a variation of what Frank mentioned. And I think here is where if the brands are not differentiated enough for consumers, or operated in a way that's differentiated enough for consumers, there's a real risk in this supply and demand flywheel being just completely overwhelmed by supply and not enough demand growing to meet that supply fast enough.
Okay, well, we've had some wonderful questions. Some of them are long, and they look as if it'll take a long time to get through them. So I may well defer those. But what does the panel have to say about white label operators? One question here: do white label operators hold owners to maximize or optimize relations with the brand? Some thoughts from Simon's presentation earlier as to which side they're really on. Anybody want to pick up on that particular question? Do white label operators hold owners to account?
Well, I think it may have been a typo by Simon, because I think he means help. I think that white label operators, if they're smart cookies, absolutely need to engage with the brand in a constructive and collaborative way to draw the best from the brand. So the most frustrating thing is a passive franchisee who's got all of these system benefits that they can access, and they're not engaging enough in sales activities or promotions or helping the brand to evolve the consumer offering. That is just nuts. So in my experience, right across the white label spectrum, those operators are highly motivated to put the brand to work to best effect, and I think that they really help the brand to evolve, because they are the hungry sparrow wanting more all the time. So I think it's a good relationship.
Okay, thank you for clarifying that, and appreciate your response. So one of our attendees, David Harper, says, what are the shortest terms you've seen in franchise agreements for highly desirable hotels for the franchisor? Do they vary significantly on a geographic basis? Jerome?
Yeah, well, I'd happily pass on that question for obvious reasons. This being said, terms do vary depending on location, depending on the positioning, on the tier of the asset. For this reason, the lower the tier, the less likely it is an operator will want a longer franchise agreement, because those are the hotels that will need to be kept up fairly often. And they're not built necessarily to the same standards as the premium or upper upscale hotels.
Okay, a lawyer's answer, Karen, please.
I think I'd agree with Jerome there. It really depends. I haven't seen any very short ones recently, not in the hotel sector, but I have seen 15, I have seen 25.
And Frank, what's the shortest one you've come across?
Well, I can tell you it's far more predictable than you'd think, because the ask is almost always 20. The request from the operator or owner is almost always 10, and the settlement is almost always 15.
That's when it gets to me, you see, Frank. It's already done. That's I started with the 15. Yeah.
Okay, so Caroline has asked a question. It's a bit of a long one, but it sort of starts to move us towards wondering whether there is any opportunity for the luxury segment to engage in franchising. Is there any experience these days Just hold up your hands. And anybody come across a luxury hotel that has been franchised? Sorry. Whoops. Simon, you want to come in there?
Yes, I mean, one of our members, which is actually a pretty experienced owner, actually runs North Island on a franchise with Marriott Group. So it's pretty unusual. Now they're an owner of a Ritz-Carlton, so they're pretty experienced at the luxury sector. Jeremy,
The
I'm sure you know what I'm
Ritz-Carlton, which is
talking about.
managed.
Sorry?
Of a managed Ritz-Carlton.
Oh, a managed Ritz-Carlton, indeed.
Okay, but are there any?
But it's pretty rare, I think.
Are there any instances that you guys think where a franchise agreement could be advantageous to the owner in the luxury segment, and they can actually achieve a franchise agreement that is going to be owner operated rather than brand operated?
Yeah, I can think of a few instances. I'd say when you do have, and North Island is a great example, it's a luxury collection, which is the only brand we franchise on the luxury front. It's a small hotel. So when you have a very small operation, do you really want the operator, and does the operator really want to get in there and staff that hotel, given the limited potential focus the operator might have on a 10 or 20 room property? And I think the opportunity does lie there. On other larger, more standard assets, I think it's still a level of protection the operator will want to keep in delivering the luxury experience. Okay.
Can I move on? I'm going to move on. I'll try and come back to some of our audience questions a little later. So it's important to understand the costs of a franchise, not just the royalty or the license fee, marketing contributions, loyalty costs, systems costs, and so forth. To your experience, in your experience, do people really get down to that level of detail? How much of a negotiation is there of that, or are these just terms that are there, terms that are non-negotiable, that people either have to accept it or not? Karen, from your perspective.
Well, I'd never advise a client to go in blind on the financials. I would always say you've got to, and not least for budgeting purposes, know what your base position is, or what it all looks like. And I think in some jurisdictions, not the UK, I think certainly in the US, there is a requirement for transparency in relation to levels of fees. So for sure, and I think some of the larger brands would, as a matter of course, supply to a franchisee a breakdown of what the anticipated fees would be, certainly for the initial period.
Okay. Richard Eaton Hart, one of our close friends, and thank you for your question. Guys, how do you measure brand loyalty? I mean, how can you really measure brand loyalty? Do many people not have several loyalty cards in their wallets, and they choose a hotel more on location, price, and service levels? You know, as long as they've got the relevant card, it doesn't really matter, does it, Carmen?
Yeah, I think if you look at our demand pool coming through Booking, the majority of consumers are actually visiting hotels only once on our platform in their lives. And that says something about brand loyalty, at least within our demand base. Now, very different, obviously, to what Jerome said in terms of what and how customers may perceive loyalty today. I think for us, it really translates into loyalty around an experience and the ease of booking and the ease of using the technology to do something that saves time for the individual consumer and gives them great choice and a trusted experience. There you come, and there are lots of things that are much more visible and at the consumer's fingertips that may not have been the case 10 years ago, such as guest reviews. And so I think the definition of loyalty is really evolving, and we need to think about that slightly differently.
And one of our questioners has asked, is there such a thing about loyalty for the Y or Z generation? Maybe that's something that we
I think there is, Russell, and they're more and more focused on the issue of sustainability, for example. I think that's a big thing for those generations.
Yeah, and just a bit of a shout out, Karen and I are working on a future event of this nature that is going to be focused on ESG. So look out for that in the months and weeks to come. I'm sad that we're getting to the end of our session, and apologies that we can't just keep this going on and on, but so be it. I'm going to move to a final question and then hand over to my good friend Graeme Smith. So panelists, please summarize, just take 1 minute or up to 1 minute. Why, in your opinion, a hotel franchise is either worth having or not worth having? We'll go in a different order completely. Jerome, why is it, you're not going to say why it's not worth having. Why is a hotel franchise worth having? What's the one thing? Summarize, bring it to a close.
Feels like I've covered that a few times before, but when you have a hotel and you're considering branding, just make sure that you're going with the partner that can deliver a client's guest, that has the most loyal database of customers. And this is really what we've been doing for hotels. If on the other hand, you're in a market where you don't need any top line revenue from an operator, then white label arguably is your option. But if you do need higher average rates, if you do need occupancy, then franchising with a top end operator is your way forward.
And one thing that one of our audience has mentioned in terms of guaranteeing, maybe that's something that you need to give some thought to in order to reassure the owner that you can actually deliver. And Frank, brought this up earlier on. So I'll move on. Karen, what's your one thing?
Well, obviously, look, it depends. It's a commercial decision ultimately that will depend on the market, the situation of both parties. I would just emphasize, again, picking up slightly what Jerome was saying, and also what Graeme Payne said earlier, which is do make sure that you do your DD on the party you're getting into bed with. It's quite a long marriage. And if you get hiccups during negotiations, from our point of view, it's often an indicator that the actual relationship might be a bit rocky as well. But I would also say with the contract, never come away from negotiating a franchise agreement thinking that you've done well by what I'd say legging over the other party, because one party that secures a really strong advantage, those kind of contracts never work, because the party who's disadvantaged will tend to come back and say, I really can't comply with that. I don't know why I agreed to that, but I can't deliver on it now. So look for fairness in the contract, but for sure, franchise agreements are gaining ground. And I think one of the elements must be, and I think Simon mentioned that, the fact that hotel management contracts are just so darn difficult and time consuming to negotiate. And that should be getting easier.
And from your perspective, Frank?
Well, I think a franchise is worth having if you go into it with eyes open and you fully understand all of the costs. The benefits are huge because you get instant access to visibility, awareness, a loyal group of customers. But I see many owners in an existing franchise relationship who don't understand the costs. And the uniform system doesn't help here because they're focused on the royalty cost and maybe the sales and marketing fee, but they don't really understand all of the click costs that are part of the relationship or the loyalty costs. So, our experience is, and it varies from hotel to hotel, but it's not unusual to see 10 to 12% of total revenue going away to the brand. Now that's fine if the brand is delivering a top line that allows you to make incremental profit. But in terms of when it's not worth having, it's when the brand is unlikely to deliver the consumers that you want. So, a country house hotel in a beautiful setting in the UK, I'm struggling to think what brand I would put on it. And what we haven't mentioned is that there are very credible distribution platforms like leading, preferred, small luxury that can give you a sense of belonging and help you with consumer connections without giving you some of the more onerous aspects of the franchise.
Thank you. And last but not least, and on the mention of the word click costs, Carmen, bring our answers to a close, please.
Yeah, I think to wrap up, it's really important just to understand what you're comparing. And is it a brand managed situation versus a independent white label operated situation? Do you really think you're going to gain something? And look at that against your real needs and capabilities, because you may need something, but if you don't have the in-house expertise to deliver it, well, by all means, don't go there, because your risks are probably going to far exceed your rewards. And really having that good handle, and this goes back to the DD that Karen mentioned, as well as Frank, the handle on the true costs, because at the end of the day, it's profitability that's going to drive value. And increasingly, we should really look at it as an industry from a consumer perspective and less an inventory perspective.
Great. Ladies and gentlemen, please join me in thanking Karen, Frank, Carmen, and Jerome. And it's with pleasure that I now hand over to Graeme Smith of AlixPartners, who's going to hopefully give us a very quick summary of the key findings and conclusions of today's panels and presentations, and to bring our webinar sadly to a close. So over to you, Graeme. Okay. Is this the opportunity for me to say Graeme is indisposed?
Russell, I think you might be struggling with technicalities.
Aha, okay. Well, on the basis that he might be. Oh dear, what a shame. What a shame.
Russell, was that just trying to hand over to me, but then my screen froze?
Ah, brilliant. In which case, Frank and I will disappear and leave you to your devices. Thank you so much again.
Thanks. Thanks, Russell. And listen, thanks everyone for joining today. Great session, and obviously started off with Graeme Payne from Bird & Bird, and saw from that not only was the if you like the domination of the market still, certainly looking at the US of the big three, with approaching 70% of the US pipeline, but also the fact that actually the regulations differ in different territories and different markets. So it is important to really kind of understand that at the outset and take good advice before moving forward. Simon Allison from Hofdel, and that commenting on the growing preference really in the market for franchises compared to maybe management agreements, and also the combination of franchise agreements with white label operators adds a layer of complexity, but is becoming a much more common operating arrangement in the markets now. And then a great panel, and just some of the takeaways I had from that session. Then the franchise model does provide that access to some know-how, but most importantly, access to customers. But what's really important is to understand really the volume of delivery of customers that the brand can provide, because you've really got to weigh up that cost benefit analysis and the return, given the fact that there'll likely be a property improvement plan that's associated with becoming branded. The presence of white label operators, as we've mentioned, actually helps to accelerate the growth of franchised arrangements in particular markets. So there's a real symbiosis within that. But what I really took away from it overall is that it's critical to have an alignment between the brand and the property owner and operator. And if you've got that alignment, that really gives you the best chance of success. And it's when you get that misalignment that you end up with some of the challenges of this model. So definitely an area that if you can set it up for success at the outset, then you know, that gives you the best chance for maximizing the return on your investment. So thanks again, appreciate everybody's time today. We will send out the slide decks that we used as well, so that people have access to those, and hope everybody enjoys the rest of the day. Thank you.